Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with the price action and what we would expect to happen next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and you will stay up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord though, do check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. And let's go ahead and jump on down into this then. So here we have the wallet counts for Bitcoin. Okay, this is the kind of smart money, I guess is what they kind of call it. Larger investors like institutional players, the billionaires, the multimillionaires, central banks, big money, big funds, right? Essentially. So we do see that we have the sharks. These are basically people who have over 100 BTC per wallet. And so understand that this is 100 Bitcoin or more per wallet. We are currently rocking 16,070 wallets that have over 100 Bitcoin in them. We then have the over 1,000 Bitcoin. This is the Bitcoin whales. And here we currently see that we have 2,028 Bitcoin whales that have over 1,000 BTC in them. And then we have the Kraken, and the Kraken is over 10,000 BTC per wallet. And we can see down here that we are currently on 115 wallets that have over 10,000 BTC in them. Okay, so what do we see within these kind of wallet counts and the data of what we see here for Bitcoin holdings is that we can see that the sharks are coming down. We can see that we have had a pullback in the whales. Okay, they've been coming out of their positions. You can see that here, and you can also see it within the Kraken-sized wallet. So because this is over 100, over 1,000, and over 10,000, they are not limited, which basically means I'm not just looking at people who hold between 1,000 and 10,000 BTC, that kind of skews your data. But what we can see across here is this idea that essentially all of these large participants have something in common. And that is that they are de-risking and they're coming out of their positions, okay? All three of these sizes. So anyone who's been holding, I say anyone, but wallet counts and the number of wallets that have over 100 Bitcoin in them are decreasing. Bitcoin wallets that have over 1,000 Bitcoin in them are decreasing, and wallets that have over 10,000 Bitcoin in them are decreasing. Okay, so we see that bullish narrative out there that, you know, Bitcoin whales are buying, but actually the data here tells a very different story. It tells us that they're not necessarily accumulating, but they are buying ahead of this pump to the upside. You can see the black line, this is the number of wallets that have over 100 Bitcoin goes up, okay, just before we have this run to the upside. And now we're at the top here. What do you see? You see them coming out, okay? Likewise, here we can see that these guys, they were doing a little bit of accumulation as we started to push up, and then now coming on out. They're coming out. They're taking their profits. Up here on the Kraken, you can see they came in, and now they're coming out, okay? So it's important that we kind of reflect on that. Now, if we come into the Bitcoin data, we can also see since the 1st of January 2023, 959,000 Bitcoin goes onto the exchanges, and we can see 970 Bitcoin coming off the exchanges. So there's a total difference of 11,000 Bitcoin. So we know that only 11,000 Bitcoin has left the exchanges, okay? And that is not an accumulative number. That's not a number that symbols or is a symbol of accumulation occurring. It is actually a number showing us that actually there's a lot of inflows and there's a lot of outflows, and it's pretty well balanced to only see 11,000 in difference. Okay, so we can see that not only on this line graph where it's incredibly flat here, but also on our 30-day average difference, which is basically the net difference between the inflows and the outflows as a 30-day average. You can see it's been cooling off to this midline and is flatlined at the top here. Anything that's coming down on this graph is bullish, and anything up high is bearish. Okay, basically it symbols more Bitcoin or coming off the exchanges versus more going onto the exchanges. So this makes me nervous, right? Not only do we see these bullish narratives out there, but it's not really being backed up by the underlying data that is actually telling us that everything is actually pretty reasonably balanced. A balanced amount of inflows and a balanced number of outflows. So when we start thinking, okay, well, we've got Bitcoin whales that are obviously coming out, or the smart money is coming out, what is the dumb money doing? And well, the dumb money, unfortunately, does appear to be fluctuating around a little bit here, kind of plateauing. So, you know, they're not really coming out of their positions in you know, huge volumes yet. But at some point, I do think that's likely to occur. We can see, of course, that the Dolphins, which is over 10 Bitcoin, they have actually started to potentially pull out a little bit. So some of these guys are starting to question whether or not this is a good time to be taking profits. And we can see that up here with 155,000 wallets, you know, kind of fluctuating to the downside of fraction, which obviously is down from the 155,486 towards 155,147. So it's not a huge amount, but I do imagine that we're going to see a little bit more. Bitcoin dust, of course, slight increases, which is 0.01 BTC. So all in all, it's interesting. Now, if we take a look at a 365-day run from, actually, it's not this one. This is the 2018. You can kind of see what's going on there. This is the one I was referring to, the 365 days of what the whales are doing, right? Over 1,000 Bitcoin. You can see that pretty much up here since the highs of March 2022, they've just been kind of, you know, taking liquidity, you know, going up here from February to March, grabbing and exiting out of their positions, grabbing the liquidity, pushing things up, grabbing liquidity, and basically just kind of, you know, pushing the price of Bitcoin gradually to the downside. And since November lows, right, the November lows are over here, we can see that actually the wallets, during that entire time of the lows, these wallets were decreasing, which means they were de-risking, they were coming out of their positions. And does that tell us, and does that symbolize a bottom in the Bitcoin market? To me, that says that big money, smart money, is not buying right now, and even the lows of November 2022, they were selling. So they either sold the bottom and made catastrophic mistakes. Bearing in mind, these are big funds, these are institutional players, these are players that usually are typically on the right side of trades. This would appear that if the Bitcoin has bottomed, that they would appear that they were on the wrong side of the trade. And I don't think that is really a smart move to think that they are, you know, wrong on their assumptions here. Normally, these are the players that are dictating the direction of the market. So everything that's happened since November with the sideways trading and the push to the upside, what have we seen these wallets do? They've come down and they continue to go down. There are now less players that have over 1,000 BTC than there were in the November lows. Basically means that they're continuing to drop and continuing to de-risk and come out of Bitcoin. That to me symbols the move of Bitcoin potentially to the downside into new lower lows, because until these guys are buying, there isn't really a vast amount of liquidity that's going to be provided to the market to basically take us to the moon, right? So if we think that the bottom is in, where's the liquidity coming from? Because it's not coming from the whales here, and retail just simply will not have the funds to be able to move the market that way. So, you know, and I say that loosely because, you know, as a collective group of retail, we can, but we don't work together very well to do it. So essentially, smart money here, I think, will be taking advantage of retail quite a bit, and will continue to kind of push Bitcoin in the direction that they are looking for. Now, the Kraken size wallet obviously has been accumulating during the bear market, and like it did in 2018, accumulates during the bear market and then floods the system to drag into the actual lows down over here. Okay, these are 10,000 BTC wallets or more, right? So again, we can see that during this entire bear market of 2018, what are they doing? They're just basically taking advantage and grabbing as much Bitcoin as they possibly can, and then they just flood the market with excess Bitcoin. Where are we in 2023 so far? 365-day view. We can see that they've accumulated and they are yet to flood the system. Is this the start of it? Is this the beginning of that flood? I don't know. Maybe they're just testing the waters to see whether or not retail are going to sell if they try to drag the price down. I'm not sure. One of the things I am aware of, though, is that we have a very similar setup now across not only the whale wallets, the retail wallets, but also the Kraken size wallets as well, as to what happened previously. Now, all of this is outside of the data of the charts, right? The charts are showing us one thing, but the underlined and underpinned data is saying something totally different. Now, as I come down into the charts, we can obviously, you know, take a look at maybe a Wyckoff accumulation pattern, whatever kind of works for you. I prefer Elliott wave theory and smart money concepts as opposed to, you know, Wyckoff accumulation or Wyckoff distribution patterns. Unfortunately, a lot of people, they draw these wrong, they draw them incorrectly, they don't fully understand exactly where we are in a cycle. I believe that we're in phase B, but it is also technically possible that we're in phase A, and you know what we're doing right now is actually just above the automatic, or actually heading up to be above the automatic rally, and we'd have to push up higher than this area here. Now, lots of different ways to kind of cut it, lots of different kind of ways to look at it. Essentially, we have to agree that this is the only place on the daily chart that this actually fits anywhere sort of loosely. Anything above and beyond this, it doesn't fit the Wyckoff accumulation pattern. So if we're to try to make a Wyckoff fit, it has to be down here. And that would mean that we've had the secondary test in phase B under my drawings. And we've got to basically push up, which is where we are right now, but below the resistance lines. And then we're going to pull back down and retest the secondary test of phase A. That's the same no matter what pattern that you're following here. There's two variants. One has a spring event, one doesn't have a spring event. We've got to come down at least $18,500 to test those lows, and then from there we'll decide whether or not this is like to go down into new lower lows. Now, taking a look at the wallet counts and then the positions of the institutional players and the billionaires, I would say probably going to have a spring event in order for those guys to accumulate. So no, I don't think this is the moonshot by any stretch of the imagination. Now, as we come up into our weekly chart, we can see, of course, that we are fighting this area of resistance right up here on the 200 EMA of our weekly chart. We're overbought on the weekly chart as well. So we want to be really cautious because there's an upper limit here between $24,000 and $25,000 that has some good liquidity in it. If I throw that in there, you can see that green right in there. There's also good liquidity right up here at 32K, but that's incredibly unlikely to get hit anytime soon. So we want to be a little bit aware. Now, crossing the 200 EMA is a bullish thing, right? We want to get that close, and we did close above it last week on Sunday evening, but we didn't really see the reaction to it. It was so close, it doesn't appear to actually have been valid. So taking a look at our current position, this could be a red week, this could be the start of something. 0.25 on the Fed rate hikes was very disappointing, and what we saw with that was the dovishness, the caution, and continuation of rate hikes from the Fed has basically drove people to dump the dollar in favor of other currencies. So you saw Great British Pound move up, you saw Euro move up, you saw a dozen other currencies, forex currencies moving up, and then what did you see? We saw the DXY dropping down, and the DXY dropping down pushed up the price of cryptocurrency assets. You need more dollars to buy your cryptocurrency assets now, essentially, because the dollar was devalued. So when we take a look at that, we think, okay, well, what is it going to take to get the strength back into the dollar? And are traders going to be buying up the dollar, or is this fake ass pump going to continue? Right, those are the kind of questions that we kind of have to think about ourselves. Essentially, it does feel that we're reaching the upper area here, and selling pressure is mounting, but we'll see how that kind of goes. So as we come down into the smaller time frames, we can see that there is a need and it is a requirement for a bit of a push to the upside. We can see that. Let me just scale this back in. We can see that within here, right? We are high. We've kind of pushed back down a bit here. We completed our expectations of this structure, and we can maybe start to move on up. But it doesn't mean that we have to come up higher than our existing highs of about 24,200. But it's a possibility that we do, because our daily chart is, of course, quite oversold. But we are looking for progression here. One of the things that we are really clear on is that we haven't got the volume behind our movements. If I throw this volume in here, what can we see? Well, the volume is just reasonably flat. Okay, the volume is in fact down. If I draw a trend line on here, okay, from our November lows over here, we can see the volume is down, so it's decreasing even though we went up into higher highs, and that is bearish. Okay, and we have a bearish divergence here on the divergence indicator. We can see that right in here. Basically, our RSI is losing momentum, so our momentum indicator is indicating to us that momentum is shifting down, yet we're going up into high prices. So we know that this is a pretty bearish time to be kind of considering movements to the upside. So profits, in my opinion, should be taken, but of course that is just my opinion. I am not a financial advisor. I can't give you financial advice. I can't do anything like that, but I can say is that I would expect some kind of volatility in this upper area here. I think the bulls are not going to want to kind of give up without a fight, so I expect us to kind of push back up a little bit, not much, but a little bit. And then I do think at some point this rug is going to get pulled from beneath people's feet, and we'll just kind of start crumbling back to the downside. So overall, the data, it looks like we kind of we have this pump to the upside. It isn't really driven from volume. It is being driven from the fact that the dollar is being devalued, and we are getting our bearish divergence really confirmed on the bearish on the divergence indicators. Been something I've been talking about for a while anyway. The bearish divergences, the higher highs and the higher lows, these have a tendency to break to the downside, and don't forget the hidden bearish divergences as well that we've been speaking about over the last few weeks as well. Now, from our weekly standpoint, this is the one that kind of gives me the most concern, mainly because this is an area where we are overbought, and the last time we were overbought, we saw FTX pull us down to the oversold area. The time before that, we had this peak up here at 25K, and then we got dragged down. And the time before that, we were way up here in the $47,000 and $48,000 ranges. So we want to be aware that where we are right now in this weekly stochastic is not a good place to be. Now, if I take that off and throw on our divergences, we have both a hidden bearish divergence right up here, and we also have a bullish divergence as we bottomed out down a little bit here. Now, one of the things that we should be aware of on our weekly time frame is our RSI has come up quite high, and again, we will be looking at this and scrutinizing it quite a bit as to whether or not we are going to be addressing actually, I would say we probably do have some bearish divergences in here anyway, but nonetheless, if we zoom out far enough, probably a monthly chart will probably do it. Yeah, there you go. There's your bearish divergences, which we saw as we were kind of moving up into this area here where we had the all-time high and bringing us down. So all in all, like I'm not confident long-term here. We can see that the stochastic RSI on our monthly timeframes just about to turn to the upside. Again, that's going to take months before we actually even see progression within this one. So I don't think we're necessarily done just yet, but overall I think Bitcoin is going to be in for a very interesting time. You can see how the volume is even decreasing across the months here, and yeah, for the most part, I'm kind of sitting back waiting to see how this pullback goes, what the structures form, and then there I'll be able to make an assumption as to whether or not we are likely to see new lower lows, or whether or not we actually just have a nice correction resting somewhere around the 18K, in which case dollar cost averaging is a pretty good idea. To be fair, I think whatever this next pullback is a dollar cost averaging opportunity, because I do think if we are to come down into new lower lows, it's more than likely only going to be the actual bottom of the bear market at that point, because the internal structures here, as we kind of think about all of these corrective moves, would be a Z wave, and there isn't anything after that. So you can reset and you can do all those things, but when we do bottom in the next retracement, if it is a new lower low, it is more than likely going to be the bear market bottom. If we do, if we don't, then obviously the bottom is in, and it doesn't mean we're not bearish. It just means that we're just going to be going sideways, and probably a long time of accumulation to occur in here. Personally though, I don't think the institutional players are going to be happy if we do not go down into a new lower low. So it'll be interesting to kind of see how that kind of plays out. I'll leave this video right there though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and stay up to date with everything that we do here at Cheeky Crypto. Until the next one though, have a fantastic day.